In the heart of New York City, a revolution in work culture was brewing. Amidst the hustle and bustle of the city, two visionaries were about to change the way we think about workspaces forever. Two entrepreneurs, Adam Neumann and Miguel McKelvey, envisioned a new way for people to work. It was 2010. The Great Recession still cast a long shadow, leaving many office spaces vacant and unused. Office spaces sat empty, a stark reminder of economic fragility. The traditional office model was failing. Neumann and McKelvey saw an opportunity. They believed that the future of work was not in isolation, but in community. Their brainchild, WeWork, promised a solution: shared workspaces for the modern professional. Spaces where collaboration and creativity could thrive. It wasn't just about desks and chairs, it was about community, about belonging. It was about creating an environment where people could connect and grow together. WeWork's early adopters, freelancers, and startups were drawn to this promise. They found a place where they could work, network, and be inspired. The company's vibrant, design-forward spaces stood in stark contrast to the sterile cubicles of corporate America. They were places where work felt less like a chore and more like a lifestyle. Word of mouth spread like wildfire. People were excited about this new way of working. WeWork became synonymous with the burgeoning gig economy. It was a beacon for those seeking flexibility and community. It was more than just an office. It was a lifestyle brand, a place where work and life could blend seamlessly. The company tapped into the zeitgeist, offering a sense of purpose and camaraderie that resonated deeply with millennials. It was a new dawn for the way we work. At the helm of this rapidly expanding enterprise was Adam Neumann, a charismatic leader with a penchant for grand pronouncements. Neumann wasn't just building a company, he was on a mission to elevate the world's consciousness. His infectious energy and unwavering belief in WeWork's potential captivated investors and employees alike. Born in Israel and raised on a kibbutz, Neumann possessed an unconventional background for a tech CEO. He was known for his long hair, barefoot strolls through the office, and a lifestyle that blurred the lines between work and play. To his admirers, he was a visionary, a Steve Jobs-esque figure who defied convention. Neumann's charisma was WeWork's most valuable asset. He had an almost supernatural ability to sell his vision. Venture capitalists, eager to get in on the next big thing, lined up to invest. Hundreds of millions, then billions, poured into WeWork, fueling its breakneck expansion. WeWork's rise was nothing short of meteoric. Fueled by a seemingly endless supply of venture capital, the company expanded at an astonishing rate. New locations popped up in major cities across the globe, each one more lavish and Instagrammable than the last. SoftBank, the Japanese tech giant led by Masayoshi Son, became WeWork's biggest benefactor. Son, known for his bold bets on startups, was enamored by Neumann and his grand vision. He poured billions into WeWork, valuing the company at an eye-popping $47 billion at its peak. The influx of cash allowed WeWork to grow at an unprecedented pace. It acquired companies in a dizzying array of industries, from education to fitness to wave pools. Neumann's ambitions seemed boundless. He talked about creating a global community, a WeWork nation, that would disrupt everything from real estate to social media. Behind the dazzling facade of WeWork's success, however, cracks began to appear. The company's business model, leasing office space long-term and renting it out short-term, was inherently risky. As WeWork grew, so did its exposure to a potential downturn in the commercial real estate market. Moreover, Neumann's lavish spending habits and questionable business decisions raised red flags. He reportedly purchased a $60 million private jet, invested in a wave pool company, and even trademarked the term "we" for personal gain, forcing WeWork to buy it back from him. Whispers of WeWork's financial vulnerabilities began to circulate among investors and industry insiders. The company's losses were mounting, and its path to profitability was unclear. Yet Neumann remained unfazed, continuing to tout WeWork's potential and downplaying any concerns as mere bumps on the road to greatness. WeWork's rapid expansion came at a cost. In its haste to grow, the company prioritized speed over sustainability, often signing long-term leases on properties that sat half-empty. Neumann's focus on creating a culture led to questionable investments in things like a wave pool company and a school that were tangential to WeWork's core business. The company's community ethos, while appealing on the surface, often masked a chaotic and demanding work environment. Employees were expected to fully embrace the WeWork lifestyle, working long hours and attending mandatory events. The line between work and personal life became increasingly blurred. Neumann's unconventional management style, while lauded by some as visionary, struck others as erratic and irresponsible. He reportedly held business meetings in loud, crowded bars, made major decisions based on gut feeling rather than data, and surrounded himself with loyalists rather than experienced executives. The community that WeWork so proudly touted began to crumble under the weight of its own contradictions. While the company's marketing materials showcased smiling millennials collaborating in stylish spaces, the reality for many WeWork members was far less idyllic. High turnover rates among members meant that the sense of community that WeWork promised was often fleeting. The constant churn made it difficult for meaningful connections to form. Moreover, the company's focus on providing a cool work environment sometimes came at the expense of basic amenities like reliable Wi-Fi and quiet workspaces. The emphasis on community also masked the fact that WeWork was, at its core, a real estate company. It was profiting from the very thing it claimed to be disrupting, the traditional office space. As WeWork grew, it became increasingly difficult to reconcile its idealistic rhetoric with its profit-driven reality. In 2019, WeWork announced its intention to go public, a move that was highly anticipated by both investors and the tech community. The IPO was supposed to be WeWork's crowning achievement, a validation of Neumann's vision and a testament to the company's extraordinary growth. It was expected to be a landmark event, showcasing the potential of the shared workspace industry. However, the road to Wall Street proved to be far rockier than anyone had anticipated. The initial excitement began to wane as more details about the company's operations came to light. As part of the IPO process, WeWork was required to file a prospectus, a document that provides potential investors with a detailed overview of a company's financial health. This document is crucial as it lays bare the inner workings of the company. The release of WeWork's prospectus sent shockwaves through the financial world. Analysts and investors were taken aback by the revelations contained within. It revealed massive losses, a convoluted corporate structure, and questionable accounting practices. The numbers painted a grim picture that was hard to ignore. The prospectus also shed light on Neumann's lavish spending, conflicts of interest, and unconventional management style. These factors raised serious concerns about the company's governance. Investors, who had once been so eager to pour money into WeWork, began to get cold feet. The enthusiasm that had once surrounded the company was quickly evaporating. The IPO, once touted as a surefire success, was quickly spiraling into a disaster. The dream of a triumphant public offering was turning into a nightmare, leaving everyone questioning what went wrong. The fallout from WeWork's disastrous IPO attempt was swift and brutal. The company's valuation plummeted, investors pulled out, and the IPO was ultimately shelved. Neumann, once hailed as a visionary, became a symbol of corporate greed and excess. Facing mounting pressure from investors and the media, Neumann was forced to step down as CEO. The company, once valued at $47 billion, was on the brink of collapse. SoftBank, WeWork's biggest investor, swooped in with a rescue package, but the terms of the deal were highly unfavorable to WeWork and its shareholders. Neumann's downfall was a cautionary tale about the perils of unchecked ambition, corporate hubris, and a culture of Silicon Valley excess. It served as a stark reminder that even the most promising startups are not immune to the laws of gravity. The story of WeWork's meteoric rise and dramatic fall resonated far beyond the world of tech startups and venture capital. It captured the imagination of the public and became a symbol of the excesses and pitfalls of the modern business world. It was a parable for the times, a cautionary tale about the dangers of unchecked hype, the critical importance of due diligence, and the need for ethical leadership in an era of rapid innovation and disruption. In the aftermath of the WeWork debacle, there was much soul-searching among investors, entrepreneurs, and the media. The fallout prompted a reevaluation of investment strategies and business practices across the industry. Questions were raised about the sustainability of the unicorn model, the role of venture capital in fueling corporate excess, and the need for greater transparency and accountability in the tech industry. The conversation shifted towards more responsible and sustainable business practices. WeWork's story serves as a stark reminder that even the most disruptive and innovative companies are not above the basic principles of sound business practices, ethical leadership, and a sustainable business model. It underscores the importance of balancing ambition with realism. It is a lesson that continues to resonate today, as we navigate a business landscape increasingly defined by rapid technological advancements, abundant capital, and the allure of the next big thing. The echoes of WeWork's downfall remind us to tread carefully and prioritize long-term stability over short-term gains.